That story shortly, but first, the critical challenge for Australia's 2 million small businesses, fighting to survive in an economy in the grip of recession, with more grim news overnight about more trillions in toxic bank loans globally and the ongoing credit squeeze. Small business in this country expresses deep and growing concern about the increasing influence of the big four Australian banks, who, it's claimed, are taking advantage of their growing market power, making it more and more difficult and expensive for small business to borrow money to cope with the global crisis. The banks themselves vehemently deny the claim. Certainly, the banking sector here has become increasingly concentrated over the past 18 months, with the takeover of all or part of 5 smaller banks and non-bank lenders. And small business says the big banks have added further to their market power thanks to the federal government's bank guarantees to protect them from global forces. Business editor Greg Hoy reports.
The towering strength of Australia's major banks is hailed as one reason Australia has weathered the madness of the global financial crisis better than other nations. But has encouraging the superiority of big banks over small conversely created a market monster?
We've noticed that the interest rate reductions have not been passed on in full. I would have thought they would have been in a more competitive banking sector. There are some signs that bank profits have actually gone up on home loans.
We certainly have a very competitive marketplace here, as is evidenced by the fact that margins continue to decline.
Government and regulators have watched passively as the big four banks recently consolidated their dominance, engulfing second-tier lenders such as St George, Bank West, Rams, and a share of Aussie Home Loans and Wizard. The growth-hungry majors now control 82% of the Australian mortgage market.
St George, that was a bit of a surprise that Westpac was allowed to take it over, and it did seem to me to be a serious competitor to the other banks.
So are we left with an oligopoly?
We are left with an incredibly concentrated banking oligopoly, just the big four. The only way to get good results from the big four is to put them under competitive pressure, and there is virtually none at the present time.
There has been a reduction in what we call the non-bank financial institutions, that is the non-mainstream bank lenders. As to the question of power, I think that is in part of our folklore, that people point to the major banks and think they've got too much power. I would actually reverse that and say that we have a very strong banking system that is well placed to support our economy.
But Australia's small business sector begs to differ.
It seems to me that the banks are interested in the easy pickings, in lending to mortgagees and in lending to the big end of town, and they're not too interested in lending to small business, which they seem to, without any evidence as far as I know, have almost made up their minds that small business is too risky.
Small businesses in the main tend to have higher risk than larger businesses, because larger businesses tend to have more capacity to deal with shocks.
The word risk is bandied around an awful lot. If you happen to be a business prospering, doing well and bucking the market trends, then you shouldn't be lumped in the same category as other small businesses in your sector which might be failing. And that's a problem which some of our members are certainly facing.
The nation's 2 million small businesses employ 4 million Australians, the largest employer outside government, generating 30% of all economic activity. Access to bank finance is crucial to the vitality of this sector, particularly now as they strive to survive the global financial crisis.
When they can't access that kind of credit, or when it comes at an exorbitant cost, that puts real pressure on small businesses, and often that results in staff hours being cut, staff being laid off, and small businesses seriously having to consider closing down.
These are the 4 chief executives of the major banks. None would be interviewed on their level of lending to Australian business. The Commonwealth simply didn't reply to our request for an interview. ANZ and Westpac said their CEOs were not immediately available. When asked when they would be available, no reply. As happens remarkably when the big banks are facing such sensitive issues. Only one departmental executive of one of the banks was volunteered to hold the line.
In summary, the risk has increased in many parts of the economy, not all, but in many parts of the economy. And therefore, the way that banks would look at lending into certain parts of the economy will reflect that level of risk. And of course, taking a future view, a short, medium-term view, we have to be very careful that we're lending in a way that supports a business in the economy and avoid making reckless lending decisions.
Small business hasn't been regarded well by the big banks for quite some time, well over a year if not longer, and that's something that we seek to change as a matter of urgency.
Caught in the middle of this crossfire, the Federal Minister for Small Business, Craig Emerson, called together representatives of all Australian banks to discuss sensitivities over their level of service to small business.
Well, there is a fair bit of evidence now that small businesses are struggling to get finance. During an economic downturn, credit is really the lifeblood of small business, and it's really important that during this economic downturn that credit continues to flow from the banks.
But the big banks simply deny there is even a problem.
Small businesses that have a good business proposition, are well managed, will get finance. From all of the data that I'm looking at, we are supporting small businesses.
They are tightening their lending standards and they are charging more.
The cost of loans to small business is at its lowest level for 4 years.
If you're lucky enough to have bank lending at the moment, then I can give you a lot of examples as to how people are being done over. But more importantly, banks aren't even lending to small business at the moment. The hurdles to getting a loan, to getting a finance, to get into business or to in fact grow your business are so high and so long that a lot of business people or potential business people are giving up the chase.
The cost of funding the banks, in other words, the money that the banks borrow, particularly from overseas, has gone up, and therefore the banks have not been in a position to pass on all of the Reserve Bank rate reductions, but they have passed on the majority of the interest rate reductions.
Whilst you might get a situation where you have a decrease in the actual loan rate, if the facility fee increases based on the risk assessment of that particular industry and which that business operates in, you can actually see an overall increase in fees anyway. So it's almost like every which way you turn, small business is really faced with mounting costs.
The government should very closely scrutinise bank fees and charges and interest rates, and in particular, as wholesale rates of lending start to fall, put a lot more pressure on banks to pass them on quickly.
I think we need to be careful about imposing any more and extra burdens on banks and other lenders to provide the information.
The government says it's doing all it can, but it's the government that's guaranteed not only bank deposits but loans sought by Australian banks from overseas lenders, known as the Wholesale Lending Guarantee. Problem is the government charges big banks a much lower fee for that guarantee than their smaller rivals, which is hardly helping competition. So will the Minister back the plea from small business for a level playing field for smaller lenders?
Of course I will support small business, and I'll have the sorts of discussions that we need to within government, but I can't give a commitment here until I have seen the analysis of all the pros and cons of the various arguments that have been put.
On both sides of this great divide, there is agreement on one thing, that this is all about the importance of profitability.
It really hurts small business when we look at the reported profits of the big banks at the moment. I mean, my understanding is that the Reserve Bank has been reducing interest rates to stimulate the economy, not to increase the bottom line of the banks.
It's important, of course, that banks remain profitable. Profitability is a reflection of their strength, and in Australia we've been very fortunate having strong and stable banks. Strong and stable banks means that banks can lend to businesses and consumers in tough times.
Greg Hoyer reporting on two sides of a coin.